Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar continue to pare back a bit here. We're looking for a continued move lower, and when we did our analysis, we're looking for a eventual move down here to this 96.08 confluencing with the 96.05. We're looking at the 2-hour chart here. We did see the euro make its move up in here, and I thought we might make it eventually to 1372 yesterday. We talked about a pause here at 1359. I had that posted that in the room and already had that this chart up or this level before coming across on these touches, and that's right where the market actually ran out of gas and we took a dip. I thought we might dip a little bit further. Might we tag into the teens? I think we had our bias chart support. I think it was 1316. Yeah, and I think the low was, let me see, what even that low? It was 1326. I think it was 1325. So we didn't even dip that much. But as I pointed out before, I think we'll make it this 1372. Maybe we'll make it today. The key thing is, as I pointed out before, and we discussed in yesterday's webinar, we have this trend line. I usually don't track the trend lines too closely, but this is pretty key because this is, if you put it into perspective, you see, that was a pretty good little run up in here. About that time, everybody was thinking that the euro was really going to start to move. People talking about 118, 120, 122. Of course, then we did see that pretty decent sized correction here. But when you come back, the retracement high up in here, tagged up in here, and then we once again went to new lows again. Another retracement. So this is a very key trend line already here. I mean, we've already had 3 touches and we're actually punching up against here, but we have 1372. My take is if we can break beyond this, and really we were talking about the 1340, which if you look on here, we still on a daily closing basis, we're not able to take out 1340. And my thoughts were is if we got past 1340, then we'll go, our target was going to be, I think it was 1413 on our Asian analysis for the start of the week. As I mentioned, and here it is, right here, 1413. It doesn't change anything. I mean, I think, as I mentioned before, is we actually have a catalyst in place regarding the Fed, and if the dollar is able to go, not the dollar, but the euro, and inversely the dollar. But if the euro is able to break here, then I think that not only we get to 1413, I mentioned that, but I think that momentum could get us even carrying even further. I think that that would have really more to do with the dollar than per se the euro, because if we do break this area lower here in the dollar, come Fed day, and I think we'll go and push beyond that, then people are going to be talking about this being from a technical standpoint. We probably have put in a short-term top, and then they'll be talking about different areas for them to correct. I guess the first one for starters would be the challenges of the old low here at 95, and that will open the door, as I mentioned, for the euro to extend much further. Here's one pair, but wow, man, I can't even believe it. Here on the peso, and Steve and Greg had done that video on Real Vision TV, and they were looking for a lot lower. When we were up in here, and not only do we break, and we talked about a pretty good value area between 15 and 20, and we broke. And one of the things I talked about, and we didn't point to that, but I mentioned it, was here on the weekly chart. This prior weekly, look, it had taken out the prior week low, okay? And look at these levels coming across in here. You see that? Had closed beyond that. So I knew we'd be under pressure, but I didn't think we'd come under sustained pressure immediately. I knew that over the course of a week, couple of weeks, we could remain still pushing a little bit lower, but I thought, okay, we'll probably get to 15-ish, probably bounce around, and then maybe we'll bounce up to maybe 22, 20, but 24, and then we'll roll back again as we test. Because as I said, if you look here on the weekly, not only take out the prior week slopes, look at these highs coming up here, these closes. We took them out too, so I knew we'd see some pressure, but boy, there's no way I thought we'd see this kind of pressure, and pressure did we see. Hard to believe I actually picked this thing up, made a few nickels. I'm glad I didn't pick it up again. I actually had an opportunity to pick it up. I think it was at 11, and it bounced again, and I missed that. But then it was, we quickly ended up moving lower, and boy, did the wheels come off the caboose. There is some supportish area in here, but this thing has really come under some intense pressure. Probably aiding and abetting that would be this continued move up in here in crude oil. And that just has not let off. Look at this, 59.24. Now, that being said, in the crude oil, we'll move to this. My key for me was at 58.96 that we talked about, and we did not close above it. We closed right in that area. We'll get to that. Right there, we closed at 58.94. I remember it's 58.96, but there's still, and I said, to me, it was key. Where do we close at if we're going to take out 58.96? Well, we're pressing it again, and we're actually above it. So this crude, amazing. Well, like I said, I think it's help being help. One helps another that helps another. And of course, with SPOOs still, look at this. Unbelievable here. That just keeps providing that extra. And we talked about this in the Asian analysis to start a week. I thought the only thing that's going to pull this thing back would be, a decent correction here in SPOOs. And boy, we're certainly not seeing that. So the crude oil just continues to move higher. This is definitely a surprise for me. But with that, let's go on and move into the news, and then we'll move into the analysis. Okay, Europe back to the drawing board for May's Brexit. Some paint the latest twist in the Brexit saga as proof of a constitutional crisis. Others, including hard Brexit champion Jacob Rees-Mogg, simply welcome the fact that the parliamentary precedent has been followed. Either way, the Parliament Speaker, John Bercow's insistence that Theresa May cannot call a fresh vote on her deal has torn up her whole game plan. Her cabinet, itself not exactly ununited on the matter, will plot its response at the meeting today. Brexit Secretary Stephen Barclay this morning ruled out going for a disillusionment of Parliament because it would involve dragging the Queen into the whole controversy. He argued instead that the same deal could be pitched again if the circumstances around it change, somewhat at odds with Bercow's reasoning that it must be different in substance. The other variable is in all this, that are the 27 other EU leaders that May will meet at a summit from Thursday. How will they now respond on the crucial question of granting an extension is anyone's guess. One option is that they offer nothing at the summit itself in the hope of focusing minds in London on reaching a deal only days or hours before the March 29th deadline. A meeting of the bloc's EU affairs minister today could yield clues. The main suspect over the fatal shootings of the Euro case is a police custody must be brought before a judge. Well, I'm not going to get into any politics. It has nothing to do with us. For markets, at least, the biggest surprise was how little the sterling moved on the latest dramatic Brexit twist. The pound dipped only briefly below 132 after the UK's Parliament Speaker Bercow, citing centuries-old precedent, unexpectedly ruled that UK PM May could not bring a Brexit withdrawal agreement back for a third vote this weekend without substantial changes. That dip was quickly reversed, partly out of confusion over the next direction and reluctance to take directional bets, but also because there's little disturbance to the running market assumption of delay or deal or delay. Few believe it ups the chances of a no-deal crash. For many, the only issue now is whether it's a long or short Brexit deal, with forms increasingly likely as the EU will see no point of a short extension of a month or two without some clear indication May can eventually pass the existing agreement. A long delay raises the chances of a UK general election or even a second Brexit referendum. The other more prosaic reason for sterling's relative calm, if nudged higher to 132.70 this morning, was that all world markets are in thrall to the Federal Reserve's latest policy decision tomorrow, with confirmation expected that no further Fed interest rates are on the cards this year, and that the Fed's balance sheet rundown will stop by the end of 2019. The dollar remains on the back foot, and world stock markets have been buoyed. The dollar index is pushed lower for the first thing Tuesday, with euro-dollar hovering around 13.50. The 10-year Treasury yields skulked just well above 260, although Wall Street stock index is into the black again. Late Monday, the global equity market ebullience had greeted the market, ran into a sand overnight, and major Asian bourses ended a little change. U.S. and European stock futures were marginally positive for the first thing. Italian and Portuguese sovereign bonds over Germany remained close to the lowest in months following Friday's credit rating upgrade for Portugal and relief that Italy did not get a cut. Europe's markets are watching German zoo. Investor sentiment released later, with UK eyeing the latest employment and wage reports. And let's take a look at where we stand here on the aforementioned. So the zoo will be coming up at the top of the hour. Last time was a minus 16.6. So we'll be looking at that. Also, we had UK jobs data. That'll be at the bottom of the hour. So we'll see where that moves us. I'm still throwing off a little bit in the time change because, like I said, for us here in the States, our time already changed. So, but we'll go on and get to that later on. And let's see, German zoo number, Eurozone Q4 wage and labor costs. And for the U.S., Q4 earnings, durable goods. So we do have durable goods later. Canadian dollar flat ahead of the federal budget and the Fed decision. The Canadian dollar was little change against the greenback on Monday as investors weighed the potential impact of a federal budget on Canada's fiscal deficit. Looking at it from a technical standpoint, remember, we need that close. And we'll jump into that quickly. We needed that close above 33.54. You see it there, standing right there. I told you we need that daily close above 33.54 to open the door for a much higher move, and we just simply did not get it. Maybe we've seen a lot of the good news in Canada already. As far as the currency is concerned, said Hosan Marji, senior portfolio manager, the deficit widens more than expectations. There may be a hit to the currency. The dollar declined against a basket of major currencies ahead of the Fed's interest rate decision on Wednesday. Traders expect there will be no Fed hikes this year and are even more building in bets for a rate cut in 2020. Australian dollars and New Zealand dollars mark time for Fed. The U.S. President has been pressured by speculation the Federal Reserve will end its policy meeting on Wednesday by abandoning forecasts for rate hikes this year. Labor markets data will be key to resolving the tensions in the economic data over the coming months, and our view is that it will show a weakening labor market, triggering the RBA to cut rates to 1%. This makes the labor force particularly important where we expect unchanged employment with the risk of unemployment rate ticks up to 5.1%. New Zealand, the key will be the test on gross domestic product, also due on Thursday, where analysts look for growth to improve 0.6. And on to sterling. Sterling regains poise as fresh Brexit developments eyed. Brexit currency got off to a volatile start to the week, shedding 0.5% in late London trading on Monday after John Bercow, Speaker of British Parliament, said PMA's deal could be voted on again unless a different proposal was submitted. The predominant notion adopted by the market is that as long as the worst-case scenario of hard Brexit is avoided by delaying Brexit, the pound is a buy on dip, said Rabobank strategist in a note. That view was shared by Morgan Stanley strategists who said the pound remained a buy on dips. The U.S. bank's positioning tracker showed broader market positions on the pound was broadly neutral. And on to the dollar near 2-week lows before a Fed meeting and yen strengthens. The dollar was on the defensive on Monday, weighed by growing expectations of the Fed adopting a more accommodative policy. The dollar index, which measures the greenback against its basket of 6 major currencies, dipped to 96.43. Around 30% of market participants are expecting a rate cut this year, said Kumikome Ishikawa, senior strategist Sony. The focus is on the extent to which the Fed is being able to take into account without shocking the market. Masafumi Yamamoto, chief currency strategist at Mizuho, said while the market is expecting more accommodative sentiments from the meeting, equity markets are unlikely to react positively to such a development. If the Fed shows a gloomy outlook for growth and rates, then it's also negative for U.S. equities. And that's the point that I was making here. And that would be a negative for the dollar. Well, I didn't focus so much on the negative for the dollar, although I guess it will. My thought was that whether we can get this equities to pull back. And my thought is, well, if the Fed says, okay, we're not going to raise, and to me, it's more about, okay, there won't be any more of a rush or a sugar rush that we can get, because at that point, now you just focus on the economy. And we've already had, not that I don't think the economy is going to slide that much, although we may pare back. I'm thinking, well, we've come so far, so in this run up in here in the S&Ps, what would be left? You see what I'm saying? So that's where I think that we would get that correction. And maybe that would finally get, crude oil to pare back. But like I said, that's one leading another that's leading another. Well, anyway, he says the Fed shows a gloomy outlook. I don't believe they're going to show a gloomy outlook. And he said that's negative for the dollar. There's a risk that whichever unwelcome outcome is, it will push the dollar yen. Dollar took a breather against other major currencies, and yen rose 0.2 to 11.20. Sterling also gained, rising almost 1/5% to 32.74. It had seesawed overnight as the Speaker of Britain's Parliament said PMA's deal could not be voted again unless the proposal was submitted. The Bank of England is expected to leave interest rates outlook unchanged at a policy meeting on Thursday. German economy, Europe's largest, barely avoided recession in the final quarter of last year. We had a negative impact from the global risk disputes and Brexit weighed on the decade of expansion. The ZOO expected index is improving for four consecutive months, says Mizuho's Yamamoto. If another improvement is shown, then I think they'll be quite positive for the euro. Well, as I said, we can see here what we're looking for at the top of the hour. So on the ZOO, they had it shown here, prior was minus 13.4. Now that's on the sentiment, but the overall expectation is minus 16. Now in the Eurozone, the actual sentiment, minus 11 they're looking for. Current conditions, minus 17. They haven't come up with the one right here for the actual expectations, and that was minus 16.6. So let's see if we get some improvement on that. So onto the euro dollar, really no changes. I had 13.72, which is the 50% of this move. And we talked about this in the 38%. We barely had a pair back. So that suggests a move to the 50%. We barely even had this pair back. So 13.72 is what we're looking at. Well, if we break beyond here, we may stretch this. So we're going to give it a little bit more area right here. A potential stretch up here. Okay, UK data just came out. Came in at 3.9. And UK jobs and data. And we talked about this yesterday, is that for the cable, things continue to go improve. When you look at the euro, they're looking at now from the glass half empty to now the glass half full. Okay, well, they even showed here, the data is just not as bad as it was before. But in the UK, they've actually had positive data. So it really opens the door that maybe we can get that move higher. But moving back in here to the euro, there's that 13.72. Can we push a little bit higher? Yeah, we can, in light of them only dipping at 13.25. So we'll give it right there. You see that? We talked about that yesterday. I actually took a scalp short against this area, but be very, very careful getting short this thing. The closer we get, I think it's going to be tougher. We might just push up a little bit higher and stay in this area above this trend line. I thought we would do it yesterday. I thought we'd make it dip a little bit, come back. And I didn't expect much. I took a scalp, but maybe like to the 40s. I thought lower 40s, but I even mentioned down here. I think it was 1344, 43 was some scalp support. I thought we might just dip just a hair lower, and then we pop back up to 1372, and then we kind of like maybe kind of sit around this area here. Well, we just continued to fade, but we didn't come that far, only to 25. Well, I think we might even push beyond that 72. So right here is 1387, and we're actually going to use that for our resistance on the bias chart. The key continues to be, and I thought we'd get it yesterday, and we didn't, a daily close above 1340. Support, we'll actually move this up just a hair, not much. Well, we're kind of stuck in the middle here. Morgan Stanley says it's a buy on dips. Rabobank says it's a buy on dips. And the thought is that pretty much the worst case scenario is off the table, at least they believe. This area is key, this 3178. I'm looking at it here on the daily, you can see that. So no changes there. You see that? This continues to be key. 3305, 3374. The pound hasn't really moved much here. So no changes at this point. None at this point. Moving into the Aussie. We had 7130 as our key area for support with 7068. Keeping it very, very tight. And no changes. There's a 7068. And there's 7130 just above. And we're just trapped in a tight range. So really no changes here. Let's go and move into the dollar CAD. The dollar CAD's holding up relatively well if you think about where the dollar index is paired back, where crude is. It's actually holding up very well. But as I mentioned yesterday, we're not going anywhere. I mean, we need to get above 33.54 on a daily close to generate some upside momentum, and we're not getting it. Although I got to say is it's holding up relatively well when you consider, the dollar index continue to pare back and oil just continue to move higher. Yesterday we had our bias chart support here at 33.10. No changes at this point, really. I guess we could push it just if they want to test it, especially consider where crude oil is. So let's go with 32.98 because bulls might feel a sense of being pressured. Just move that a little bit lower. Resistance is 33.66, and as I mentioned, we got to get that daily close about 33.54 to generate that upside momentum. Well, we're clipping along now. Well, this is something else, this peso. I did not expect the wheels to come off the caboose here. I mean, I knew we'd be under pressure. As I said, when you look at it on the weekly, we'll just reference that again. Because we had, you see, you had taken out this low, I mean, this right here, and you're taking out all these closes here. So I knew we'd be under sustained pressure. And when I say sustained, I just figured they'd just struggle for about a couple of weeks and see if crude pulls back. But I did not expect this thing to completely come unglued. I thought we'd continue to see that pressure, but not like this. And so I thought this would probably be a pretty good area in here. And actually 1911, wow, very, very good area. Look at that. And it did offer a bounce. Both of these did. But man, and then we made down late in the day to 1905. And I remember someone was asking about that or mentioned a comment to Steve. And I was saying, yeah, I go, we're even here at a support level. And he was like, yeah, he agreed. And look, we still pushed lower down in here, these 1902. So this is, man, this is under some kind of pressure, obviously aided and abetted by, continued move here on crude. But holy smokes, man, this has just been something else. It has really come unglued, and we're just looking here on a daily chart. Well, we came down here to the 78%. And we've exceeded that just a bit. $18.88. Yeah, I'm looking here for the support here, coming right across there, which is 190119. 190119. And let's move on to the 2 hour. Here we go. The key thing is if we break here past there, it's going to be 1897. Obviously, the risk is just this downside. We'll go right there with just, let's try and pull this back. $18.98 and $19,007. 19,019. That's what we're going to go with. I mean, this is a tough one. As much pressure has this been under, they may end up eventually even trying to take out the 19. The only thing that's going to help it is pullback in crude. Resistance at 19.087. That's it. Boy, what a fall. Let's go move into crude. Well, we're both at 58.96, so that's and that's what I was looking for on the daily close. If it was important, if we could do it, we didn't close above it. Let's close at 58.95. Can they push any higher right now? That would be resistance. Wow, unbelievable. 58.99. Right here in this area here. Boy, this thing continues to move a little higher. Well, that'd be 59.32. 59.32. Call 59.33. Unbelievable. To me, unbelievable because it hasn't even had very much of a correction at all. Support. is going to be right there at 58.23. And we saw the dip finally in the dollar yen. We're talking about a move. What we're looking for the Asian analysis for an outlook is, for starters, a move to 1034 with eventual move down to the pivot. So we did go in and break in here. Our bias chart support was 1124. We actually dipped. Look how low we got even down here to the 16 before it popped back up a little bit. Resistance is going to be right there. I mean, the bigger resistance is 45. So I guess you have to know where your risk level is. So yeah, we might dance up here at 38 and back and forth. The risk level is right here for 45. So that'll be the resistance. Yeah, this thing's already started to turn. Unbelievable. Can you imagine if we get a slide in equities, this thing would really come unglued. And I think people will be trying to sell this thing on every move up in here. So support, we had 1124. Support would be the old 1095 right there. That'll be the real support on a short-term basis. And onto the Aussie yen, we did make that move. Remember yesterday, we already even had that from an Asian analysis, 79.37. We got up there, we've been kind of moving lower here. Our our bias chart support was 78.87. The low was 78.87. In time, I think this will break lower. And to look a little bit longer term perspective, let's go with 78.62. Not longer term, but I mean, I guess bottom ticked it there, but let's go with 62. I think it'll have a tough time. It's already struggling to move higher, despite the move in equity. So now we have to look in a bigger picture scope, so to speak. I mean, although we've been trading very tight in here, I mean, in a very tight band, the upside is going to remain to 79.37. So no change there. I'm going to say range because it's not bearish. I don't want to say bullish. And moving on to the cash dollar index. Well, our focus has mainly been on the 2-hour chart, but we'll see where we stand here on the daily. Some decent demand here around this 96.30, although we think we're going to the 96.05. So let's move back here into the 2-hour. Now the market, if the euro pops up, dollar index takes a dip. You can see we've got some support in here and here. So because of the uncertainty, you may see the dollar pop back up. So that would be with the euro getting up to around 70, around 80, and then pulling back a little bit. And then we've got some daily support and also this level here. So we're going to go with 96.26. We already have that. We're going to stay with that. I think eventually we're going to move down to this 96.05. But for today, let's think if it dips, that'll allow the euro to pop up. But I don't think the dollar is going to come all the way down until there'll be that uncertainty. So probably pair back. And it might even stay lower. And then as we get into European trade tomorrow, maybe we'll see the dollar pull back a little bit. That meaning move higher if we stay lower down here. But there will be some good demand in here from a technical standpoint. Upside is going to be right there, 96.62. That'll be the upside. That's right there, 62, that level. Moving into gold. We're still holding up in a relatively tight range here in gold. Same thing here, no changes. Looking for 13, 14. Gold might be able to push higher if we get a softer Fed, so be careful with that. But 13, 14 is your initial resistance, and support is still going to stay 12.93. We'll keep that in check. So no changes there. From there, we'll go to the Bund. Well, look, we're trading very, very quiet here in the Bund. And no changes here. Here's the 66.17. Here's the 66.59. High for the day has been 66.49 right there. So yeah, everything's still in check here. 66.17, 66.59. No changes right there. There we go. Well, it looks like we got to our resistance. I think we had that resistance at 11,729. That's where we are right now. We're going to keep it 11,729, and we'll keep our support 11,652. But we've hit our resistance 11,729. This peso is something else. Boy, what a shellacking. We do have German zoo numbers at the top of the hour. And we'll see what the euro can go and do. But there's some good demand here in the dollar, as I mentioned. If you look here on the daily, see this 96.30 coming across here, and so right here, then when you look at it here on the 2-hour chart, and I only have this lightly put in here but I do think it provides some support. Well, that comes in the same area, and look at our 96.26. So that may allow the euro to pop up, but the pop may, and they may stretch it. They may spook some people and run it all the way up, but here's some good resistance at 1387. I think we'll make it up to this 50%. I kept this 38% because to reinforce, as I mentioned, we didn't even get much of a pullback. So that way, that's why I suggested that we were going to move up to the 50%. Although remember, initially that was our target area here, 1322. Well, actually, it's 1327. We did see a dip, but not very much of a dip. So we suggest a move to the 50%. Well, that's all we have for today on the European crossover webinar as we get ready for Fed Day tomorrow. And I'll get this posted into the room. And thanks for joining us here on the European crossover webinar.